Hi everybody, Alex Deploy here from Expert Forex. We might as well begin the webinar. There's still some people flowing into the room. As always, please pass through any comments, remarks, or questions that you might have that you want covered in this particular webinar. We're going to be looking at the market, but we're going to be looking at it from a global perspective, and we're going to say what's going on in the market overall, what's happening, and so that we don't get tied into just looking for setups as such. And so let's have a look at the market view, and we're looking at the RSI, and what we can see there is that the pound is showing weakness. It's showing quite strong weakness there. It is because it's the second currency, it's showing weakness there and over there. And then if we look on the daily basis, exactly the same. Weakness, a lot of weakness over there, and weakness. So just looking at the RSI table, you can immediately see which currency is trending. In fact, the pound is trending because it's showing weakness, and the rest are basically neutral. So when we look down at the currency, relative currency table, we expect to see the same. And here you can see the pound on the daily, over the last day or so, has lost 700 pips compared to its trading partners. A really bad situation there. So overall, right, so the first thing we look at is that we know that the rest of the market is quiet and the pound is weakening. Can you just confirm that you can see my screen? Unfortunately, I don't have that facility where I can see what you guys are seeing right today. So okay, great. So then I'll move on to the multiple moving averages. And I'm going to go straight to the daily ones, because that might give us a good idea of what's going on. Okay, now, remember we saw a weak pound in the RSI table. We saw a weak pound in the relative strength. Now you can see the same thing on the multiple moving averages, because if you look at the other currencies, they're all consolidating. And the only ones that are going down are the pound, consolidating. And that is the New Zealand, which we haven't really looked at in detail, but there's a bit of a little bit of a trend happening here. But here's the main trend there. So what we're seeing in those other tables, the RSI readings, what we're seeing in the relative strength readings, and what we're seeing in the multiple moving average readings, all are giving us the same information. So to a large degree, if you get really good at reading charts, you don't need all those other tools. You can immediately see what's going on just by looking at the charts. And this is a skill that a lot of people don't like developing, is just looking at the charts to see what's going on. Now, this is pretty clear from the multiple moving average chart. So immediately then you say, okay, what do you do in a consolidating market? Now, that is a consolidating market. Can you see it's gone from mad volatility, and it's just going down and down and down to nothing. So we are experiencing at the moment no volatility. And the same thing with the Oz, mad volatility, and down to nothing. Oh, this is a beautiful one. Mad volatility, all down. So the same story all over. I won't repeat that. So now you have to think, all right, what kind of Forex trading technique can I use in these circumstances? Because you've got to be dynamic. You can't just trade one technique all the time. You've got to start saying, all right, what's going on? There's no volatility in the market. What am I going to do? All right, so what our choices are is stay away from the market. There's no volatility. Nothing's happening. Stay away. And maybe think of joining the pound in its quest to go down, or start looking at it with it's going to be reversing any moment. So you could do that. So those are the kind of strategies you can do. You can stay away, you can look. Now, commonly what you would do when you see these kind of consolidations is you would straddle the market. So you would go, and I'll bomb down to the 4-hour charts if we're going to start talking about channel straddling the market. And just out of interest, what you would do is there's a straddle. You would put your entries, something like that. You straddle the market, something like that. But being in mind, I've drilled down to the 4-hour market. So you would straddle, and in most cases, it looks like you could actually do quite a good straddle on these consolidating markets. So that's exactly what you would do. Let's just see if I can get something going there. All right, so yeah, I think you get the idea. I'm not going to go through the whole thing, but you would straddle the market, and you would actually buy breakouts to the top, and you'd buy breakouts and sell breakouts to the bottom. As simple as that. All right, so that covers the consolidating ones, and as you can see, of the let's say 12 charts that we've got there, most are consolidating in a big way. I mean, they really are. It's just unbelievable. So now, what does consolidation mean? It means that there's a high level of uncertainty in the market, and people are waiting for new news to shake the market up. And that's why straddling is actually quite good, because the new news will cause this market to break out. Okay, so I'll keep on drawing this because this is important for our next webinar, where we will again look at what's going on. But certainly there's a consolidation happening. The only place that there isn't is on the pound, and we need to look at the pound in a little bit more detail. It is going down. You don't want to trade against a trend that strong. All the moving averages are basically pointing down, so you don't want to trade against a trend that is that strong. All right, so let's have a look. So the story of today, now there's another aspect to this. So when the market is consolidating as badly as it is now, then trading the daily charts or even the 4-hour charts become problematic because there's no movement. So, and if you're itchy to trade, because there's two things, as I mentioned earlier, you either walk away from the market, say, this is not the kind of market I like to trade, you do that. Or if you're itchy to trade, then you go down, you drill down to the 1-hour charts, and you start looking for signals there. So let's do that. Let's go to the 1-hour charts, and you could even go down to the 15-minute charts. But certainly, you see, you need to do this kind of evaluation to build up your strategy for the week or strategy for the day or whatever. You can't just blindly say, let me go and look if I can see some RSI trend line violations. You can't impose. You've got to look at your broad strategy and say, hey, look what's going on in the market. Maybe the strategy I should be using now is a straddle strategy or something on those lines. I think that's the lesson for today. So let's have a look at the hour charts, and I've got brand new ones there. They haven't been marked up. So again, if you look at the hour charts, the size of the waves. I mean, that's a 40 pip wave. It's hardly making waves. Let's have a look at that one. The Oz. That's a 60 pip wave. So it makes trading very difficult if the currencies aren't moving. Let's have a look. That one might be a bit bigger. No, that's a 50 pip move. So, you're really looking at tiny, tiny, tiny moves. This one, remember the pound we said is trending quite strongly, and what we need to do, and here's the strategy for the pound is you are looking for mainly. And just a nod, when the pound starts trending, don't stand in its way in terms of trying to trade against the trend. So what are the options? And I'll just make this bigger. Let's make this bigger first. So the options are to look for an excuse to sell. So there's an excuse to sell. If it violates that trend line, you want to sell it. That's as simple as that. Now the other excuse to sell is if it makes new lows. So you go like that, and you say if it makes new lows, I want to sell. If it breaks that trend line, I want to sell. I would say those are the only options for the pound at the moment. It could go up, but given this strong trend coming down here, I wouldn't fight that trend at all. I would just go for sell, sell, sell. The other ones are vibrating because that's the beat that they're forming. The beat is so small that you can try and trade them, but you're going to be trading them for 15 pips or 20 pips, and that's most probably not the way to go. So I think for today, let's stick with the lesson. We either did we do it that way? No, we did it on that one. Okay, so the lesson is what I would go for here is just like straddle trades for breakouts. I've spoken about the pound. We look for a potential trend line violation or a new low to trade there. And quite honestly, when the market is like this, it's best to go and play golf. And I'm always looking for an excuse to go and play golf. And here I have found one. I'll put a few straddle entries in here, and then I'll go and play golf. I think that's the story for today. Any comments, remarks, feedback on what I've just said? It's important to evaluate the environment that you're trading on. I know, you go out and you go to a course and it teaches you the RSI trend line violation, for instance, and then you come, now I'm going to start applying it. And if you go into this kind of market and you try and trade these little techniques, you are going to be smashed because the price will give you the entry. It will take the entry. It will go 15 pips and reverse. And 15 pips not enough to move your stop or whatever. You start playing. You start playing with fire. So the market isn't good for that kind of trading. Okay, I see there are no questions or comments coming. I hope you've enjoyed this video. And the market is like that. Firstly, evaluate what's going on in the market, decide how aggressive you can be or how conservative you need to be. And that's what I've just done. I've said, no, I'm not going to be aggressive. I'm going to straddle. I'm going to do this. And we'll wait for a much better market with more volatility so we can start applying the RSI, trend line violations, and all that type of thing. So from me, Alex Deploy, cheerio.